Okay, guys, so I promised you guys doing the internal and external range liquidity, which is minor and major liquidity. All right, so basically, yeah, the external range liquidity is the higher time frame highs and lows you target and you look out for. Then the internal range liquidity is the kind of liquidity that forms up within the within the external range liquidity, which is the major liquidity. Just like we have major break of structure and we have minor break of structure like that, and we have counter trend and rest in market structure. So what is this telling you? Um, this high is higher time frame. Yeah, this is an higher time frame low. Then this high is an higher time frame high. Okay, so when price created it and reversed to this point, so on the higher time frame, it came to somewhere here and mitigated, let's say, a demand zone on higher time frame and probably cleared sell side liquidity, which is internal range liquidity, or let's say minor liquidity. So liquidity, minor liquidity basically forms up within your higher time frame um range. So basically like liquidity rests on all highs and lows. So this high is the external range liquidity that moves price direction, while this gives us an edge to like buy or sell, so we can go to the external range liquidity and get an edge, like know where price is about to go to. So um that's it. So when price taps here on the higher time frame here, and when it go lower, it forms up this kind of movement, yeah, on the lower time frame. It creates like it taps into your higher time frame zone, goes up, sweeps the first tap most times, then cause a break of structure, then create an inducement, go up again. So because of this movement, up and pull back, up again, so many people will be deceived onto buying from here. So that is the reason why we have this as inducement. So inducing people into believing that price is about to buy from here. Then price comes to this zone and buy to take out the external range liquidity, which is the major liquidity that moves price movements. Then price takes it out, then does something like this again to cause a pullback. Yeah, just cause it wants to like cause a pullback, has to do something like this. Then tap into this again. Mean like when it wants to tap into this, it has to sweep sell side liquidity, then come to it. So basically on the higher time frame, we look at sell side liquidity and buy side liquidity. So for this high that we looked at for price to take out was the buy side liquidity for this higher time frame range, and the sell side liquidity was within. So let's say the sell side liquidity is around here and price shifts the sell side liquidity, then taps into a demand zone, then price does repeats the same stuff it did, but it can just deceive you, create the eye. So because price mitigated something here, you are expecting it to mitigate this, and you buy from here, then price takes you out, comes to this extreme, then boom, then targets the buy side liquidity, which is the external range, your major liquidity. So that's basically it. So all of these are forms of to take out this high is the minor liquidity. Yeah. So that's it. So this is the inducement. Sorry, I muted myself. I was the place was kind of noisy, so I muted myself. So you always target these eyes. So you can see that so many people, because they saw a break of structure here, they will mark this out as their sell entry, and price will just surprisingly most times can just tap into it, then cause a little pullback, then boom. So they will get stopped out. So that's basically the external range and internal range liquidity. So let's go straight to the chart. And secondly, we have structural liquidity and the rest that are within your higher time frame ranges. So this is structural liquidity. I know you might have heard about this and you know about it as well. So when price taps into your higher time frame range, like when price taps into it, this is what you see on the lower time frame. It forms up a trend line. So trend line traders that use lower time frame buys from here to target this, then buy from here again. And when they try to buy from this point, because let's say it's straight like this, so when they buy from there, they get stopped out. Although they will make them to make money, like make more money before, yeah, they stop them out. So it is not every time they take them out as they need to. So they also have to make money, so they can think the price is not the market is not a scam, because so many people lose money to the extent they say the market is calm and just so you have to also like make them believe that yeah, they can make money from the market, then that's it. So where is your external liquidity? So this is it. So all of these that you see inside here, okay, look, we had this eye that got swept, then we had this low that went. Some other people will have marked this out as a sell entry. So basically, you have to pay attention to your higher time frame zones rather than these lower time frame zones. So when price creates something like this and taps into your higher time frame zone, you execute Yeah, let's say this is on the lower time frame, and because all of these lows went, they were all swept. Because all of this is structural liquidity. Because price took it out, some will think this is a break of structure and this is a sweep, and the price will even create a fake inducement for you to sell from. So that's it. This is another example of structural liquidity. So when price taps into your demand zone on lower time frame, you go down to your lower time frame and see that price broke this high. I'm sorry, and price starts ranging to the upside and make trend line traders make money from this move. Then price taps into your lower time frame supply. Why? Because it has an intention of taking out internal range liquidity to come and feel it's like it has um something it has in mind to do so. What it is price intention is to take out internal range liquidity, then go to external range POIs, then travel to the next external range. So price travels from internal to external, then external to internal, internal to external. So that's it. So price came to its supply on the lower time frame and sold to this demand zone, or let's say other block. So all these trend line traders got stopped out. Then, like I said earlier, there was a first tap here, which caused this sell. So some other people will mark this as entry because they've seen it as order flow. So this is basically smart money trap. Like this is trap. Yeah. So that's it for so all of these noise you see here is internal range liquidity within your lower time frame. So even your lower time frame has internal and external range liquidity, and your higher time frame also has it. So it is not something you can just digest in a day. You have to study it, like you have to put effort in studying. So that's it. For like if you are finding it hard to um if you are finding it hard to know your ranges, you can use this, like you can use your fee. So when price comes to this supply zone, you can sell. So this is premium zone. So we sell at premium and buy at discount. So when price taps into the premium zone on the range, and this is a supply zone to sell. And when price comes to your discount, which is a demand zone, you have to buy. So that's it. And also having it, you have it in mind that you have to take out external liquidity, then we pull back again. All right, guys. So I was recording and my network stopped, so I have to continue from where I stopped. So I was about getting to this point. So on a lower time frame, when you go to like 1 minute, 3 minutes, 5 minutes, you can see equal lows when price taps into your demand zone. You can see equal lows based. It all depends on how you understand price, and based on my understanding, I buy below it, then put my stop loss somewhere here, then target the next high. So basically, all time frames have what they want to achieve. So this was the previous range, then it came and broke this high. So what broke this high? Which low, or what actually broke this high? We have this low that broke this high. So this low becomes our new range, and this high becomes our new range high, then this low becomes our new range low. So when price comes to a demand zone within this, or let's say using our premium and discount, when price comes to any demand zone within this area, and we see a liquidity like sell side or anything, price taps into it, then we go down to our lower time frame, then look for confirmations. Although this stuff you see here can, yeah, let's say this is a lower time frame confirmation. So let's say this happens, price taps into it, a lot, or let's say taps into it from here, then starts this movement to the upside, then ranges, then because you saw a break of structure here, which was a sweep, because without this sweep, price cannot sell. You understand? Because without a sweep, price cannot sell, and without sweeping these lows, price cannot buy. So without sweeping these highs, price cannot sell. Without sweeping these lows, price cannot buy. Without sweeping this, like, sorry, liquidity is everything. So liquidity is actually what moves the market, right? So immediately price swept these highs, um the sell began, and price taps into this and swept all of these lows so it can buy. So that's basically how it is. That's it. So let's go straight to the charts so I can show you how it actually is. So, like I said earlier, you can use a range. I'm using my feed. All right. So, we have this high and we have this low. Where did the pullback start from this low? Because it's broke structure and gave us a bullish momentum. All of these entries our price gave us from here to buy are now liquidity. So all of these previous lows here are liquidity that price has to take out. So basically, price actually does something like this as well. Yeah, something like this, like round. So yeah, this is liquidity. So in case you see it somewhere, you can identify it. It is very simple. So when price forms up this liquidity within this range, what is this called? Internal range liquidity. So this is minor liquidity. Where is a major liquidity? This low. You understand? And okay, and within the range, this sweep, this buy side liquidity that was swept was used as inducement for price to go to this breaker block. Because if price didn't sweep this breaker block, I'm sorry, if price didn't sweep this sell buy side liquidity, or let's call it inducement, if price didn't induce this, um price would have taken out this breaker block, then maybe come to this high, take out this high, then so because price it has to take out something to sell, and it has to take out something to buy. So let's go to 1 minute time frame in this sell and see how price actually delivered. It probably took out lows and highs before we had this sell, and for this second sell, it had to pull, like it had to sweep highs and lows before we had this sell. So that's basically how price operates. Yeah. So let's go down to like let's say 3 minute time frame. All right. So see how precise it was. Yeah. So like I told you guys earlier, your first tap can be sweep. So you can see that price came to the supply, give us a pullback, Then the first tap was swept, which is this sweep. Then the low that swept the eye got broken. Do you get it? And before it got broken, it created an inducement. So you don't sell from here because this is a trap. So when price swept this um inducement, you can see that the sell pressure really came in. You can see price didn't even like look back again because its intention here have been fulfilled. So that's it for so all of these that happens on the lower time frame are um the minor liquidity and the rest. So the major liquidity is the higher time frame low we are looking for price to like take out so we can know the direction of the market. So that's the major liquidity. And um for our second sell, let me um finish this so I can go to the second sell. Okay, this was the pattern price created for this sell. So you can go and study it. And for this sell, all right, for this sell, price had to sweep buy side liquidity. Yeah, like I said, the price has to sweep something before it moves. So price had to sweep this buy side liquidity for the sell continuation, and immediately it was swept. Price created something here and a low that was taken out. Then all of these weak highs here were induced. Yeah, all of them were induced right there. So that's it. So you can see how price delivers from one point to the other. So it is that simple. You have to like be fully dedicated so you can. So the intention for the lower time frame have been fulfilled at this point, at this very point. And you can see price created all of these within our 1 minute time frame. I can't go to the 1 minute for now because I have some other things to do. I have to finish this recording. So um for this buy pullback on the lower time frame, like on the 1 minute intention was fulfilled, then you go to your 5 minute time frame, which is higher time frame, like this is an higher time frame for the 1 minute time frame, and you have this low on the 5 minute time frame. Okay, so you have this and this on the 5 minutes. So when you take this you can target, you can see all of these sell side liquidity and the rest that was built up. Then we target this 5 minutes low. So when price came in after sweeping all of these, gave a buy reaction, and before the buy, price created all of these lows, then swept all of them. You can see how price does. Then came to this week here, then give us a buy. This buy, Okay, so sorry. So price came to this week. Let's refine it to the week. So yeah. So price came to this week. All of these lows were swept, then price bought from this week, then took out the sell side, sorry, the buy side liquidity. Then so you have to look for all price intentions. So this is the 5 minute time frame. On the 5 minutes, we had this sweep and price created a low, price came back. So if I was online to sell from here, I would have sold from somewhere here, put my stop here. Although it would have been um like 7 people, or I refine this whole week to 50%. Yeah, then sell. So when this low was gone, we have to like start looking for sell opportunities. So we had this high, which was inducements. So maybe like if you refined too much, you would have missed, yeah, you would have missed this sell. So let's see what actually happened on like 15-minute time frame. So yeah, on the 15-minute time frame, we had a week that we sold from. So that was it for this sell. So all of these eyes were induced. So before this eye was swept, we are like before this eye was swept, price swept this low, come here, and before this, after this was swept, price created a low, then created another low, swept all of these eyes, then this sell came in. So that's basically how price moves from one point to the other. So I'm expecting all of these highs to all of these to go again. Then this high again. Although this is all of these are previous day highs, so it will be risky to sell from here, but um I'll be looking to sell from here. Yeah, it will be risky, but I'll I'll sell from here. So I'm expecting it to go, yeah. So when price taps into it, my limit will be activated. So that's it. So all of these, like I said earlier, at the lower time frame, um, liquidity sweeps and everything. So um, you go to your higher time frame and see price intention, where price wants to go to. So we go to like a 30-minute time frame. So internal range liquidity intention have been filled. So what is price currently doing? Sweeping all of these next internal range liquidities. So I'm expecting this pullback, then take out all of these internal range liquidities, all of these lows, then come to this external range liquidity. So that's what I'm projecting for next week. So thank you. God bless you.